Guys, Doug Pratt with PBK Services. I've been in banking and finance for nearly 30 years, which always pains me to say because I don't feel like I'm that old, but now I am. In the lower corner, these are my two pups. Solson, who's 11, so not really a puppy, and Charlie, and that's my wife Tracy. And then this is a picture from my wife's birthday party a few years ago. Izzy is graduating, is on the far left. She's graduating with her master's next weekend, so I'll be flying to Michigan for that. And Abby is a Longhorn, so hook 'em. She says hook 'em, Robert, and Brian, hook 'em, because of the game on there too. So, but that's why I do what I do, of course. But kind of what we do. So we do a little bit of everything. I kind of started the business with having everyone in mind, every type of business owner in mind. So we do everything from bookkeeping all the way up to CFO advisory. And so, because every business needs all these steps. So whether they are just getting started, we'll help up. And I'm talking to a couple of companies right now where I'm just going to set them up in QuickBooks. They're going to run it, they're going to operate it just because it's new. But they need to get it going right. So we're going to do some check-ins on it. And then we'll go up to full-time managing their books. And we'll go up to do the taxes and all that fun stuff. Same thing, similar, we'll go through here. I kind of want to talk over, last time I did a presentation, I talked about the One Big Beautiful Bill. This is when it just came out. It came out like a few days before I actually presented on it. The good things on here, I'm going to just do some highlighted areas. Bonus depreciation is back. That's big for business owners. I think it's currently down to 60%. So going back up to 100%, what does that mean? It means when they buy a big piece of equipment, they can actually depreciate it all in 1 year, which means they get the expense in year one versus having to spread it out over 5 or 10 or 15 years on there as well. No tips on overtime. Well, the plan was no tips on overtime, and then they put a bunch of clauses in it, right? So up to $25,000, up to $12,500. If you make less than $150, or $300, and there's some phase out limits on there too. So we really have to plan into a lot of things. Same thing with no tax on Social Security. Well, kinda. We'll give each person over 65 $6,000, $12,000 for a married couple, but there's also a phase out range in that as well. Probably the biggest win is here, especially in Texas, is the increase of salt tax. This is your property taxes. So if you paid $15,000 a year in property taxes, well, you could have only deducted $10,000 previously. So now you can actually get that little advantage, and now we can put some strategies behind that, what year we pay property taxes in. So maybe we pay early this year and pay late next year, meaning because our bill comes out December 1st or in November, but they're not due until January. So I could actually pay my taxes this year in December, and then I'll pay them again, or I can pay them in January for this year or for next year, so 2026, and then I can pay them in December at the end of the year, and I can double up my taxes and actually get the double distribution or deduction on that as well. So there's some strategies we can put in place for that. Tax credit, child tax credit, it's increased slightly, but now it's also going to have a inflation adjustment on there as well. The state taxes went up permanently, and that will be adjusted with annually as well. So that's up to $15 million a year. So as I told my mom, I wish we had to pay state tax. Not a problem, because $15 million would be nice, but it's not in the plan. Another new thing is the premium tax credit, which is, you've all heard the big debates about what's going on with health insurance and the premiums going up. Well, what's happening is that they eliminated or they're lowering down some of the premium tax credits as well. And so that's a big effect that we're seeing going in there. And then auto loan interest deduction. So if you buy a new car and you have auto loan interest, if the vehicle was assembled in the United States, you can deduct that interest. Common tax issues. So I kind of want to point out some problems that I see, common problems. So probably the biggest one on businesses, filing an S corporation at Schedule C. So an S corporation is a disregarded entity that has its own form. You have to file it under 1120S. It's not a Schedule C. So all S corps or S corporations are either a C corporation or they are a LLC. S corporation is a tax designation, we have to file them on the proper form. If you file it on Schedule C, you're not filing it correctly and you can be subject to major penalties. And especially it depends on how long. So I'm currently fixing a client on that. Another big issue, which is why I give a lot of referrals to Laura, is that we have S corporations that do not pay salary to their owners. If you do not pay a salary, then you do not meet the qualifications to be an S corp. You must pay a reasonable salary. Now, the definition of reasonable salary gets a little vague, and that's where we can kind of work with it, but we do have to make sure that we're paying some. And then expense equipment that was purchased versus capitalizing. As we just talked about bonus depreciation, you know, you buy a piece of equipment, people would just expense it. So it goes on the income statement versus going on the balance sheet. So it's just a little mixed up. Another common, I forgot which one I was gonna say. I had one earlier that I didn't put in there and I forgot already. For personal, does everyone know what community property estate is? I know Monica does, I know Frank does. So in a community property estate, there's different laws and it actually affects your taxes as well. So if you're married and you file separately, did you know in Texas, because we're married filing separately, you have to include 50% of your spouse's income? If you don't, you didn't file it correctly. And you could be subject to penalties and taxes. So while some people want to file separately, kind of get some of those different tax perks, then you wouldn't do that. Another big thing is people will just see like a 1099, or maybe usually it's like a 1099-R. Oh yeah, that was my IRA. Yeah, I don't need to throw that in. And they don't add that into income. Big no-no. Under withholding is probably the biggest thing that we see. So we'll see the underpayment under withholding taxes, and you'll have to pay a little extra, pay a little interest on there because you just didn't withhold enough because you didn't have these conversations with a tax person. And it's okay if you are doing TurboTax. If you have questions about taxes, I don't care if you're using TurboTax, you're in this group. Give me a call. I'll happily answer them for you. So you cannot pay IRS any more than what you legally have to. Right? That's the goal in Texas. Who's an ideal referral? I'll go, any business owner is an ideal referral. Any person who does taxes, so anyone who makes income, is usually a good referral. I like people that probably, to use my services to do file taxes, it's probably gonna be someone that is a little bit higher on the income stream. Someone that's basic W-2, I will actually refer them personally to TurboTax or someone else as well because it's cheaper than what they would have to pay me. Really what I love is referral sources. So one of my great referral sources is financial advisors. They're my lifeblood. I help them out, bankers, mortgage professionals, realtors, attorneys, all work out. So any estate planning attorneys, we work well together. And then how to refer. So things to listen to. So I always talk about in this group, sometimes active listening. So sometimes you pick up the referrals when you're actually listening to your friends and family talk or your neighbors talk. My accountant's slow and unresponsive. I pay too much in taxes each year. I'm not sure if I'm filing my returns correctly. I'd just rather pay someone to do my returns. That's my favorite one. My accountant charges me too much. I'm not sure I really understand my company's financials. I have QuickBooks, but I don't update it until December. This is a big flag for me because I feel as a business owner, if you're not paying attention to the day-to-day or the monthly, what's going on in your business, what are you doing? Like, how do you know? I mean, are you just looking at the bank account? So that's always a great flag for me. Is that it? Oh yeah. My favorite way, how can you introduce me? Robert's pretty good about it. He'll tag me on a text, shoot me an email, comply. But my favorite one is, have you met Doug? So, questions, answers.
I have a quick question. When are you going to be golfing?
Thanks.
That's the question.
Okay, what should we tell people when they ask specifically for a CPA?
CPA. So I am not a CPA, I'm an EA, so I'm an IRS enrolled agent, so licensed to do taxes in all 50 states. I don't have to worry about any state lines or anything else like that. The difference between a CPA, well, do you know what a CPA actually stands for? What's that middle word?
Public.
What's a public company? So a certified public accountant actually means to audit public entities. So it is a little bit higher level degree, but CPAs just don't do taxes. They do audits, they do several different things. I'm fully focused on taxation. And probably in the next year, I'll actually have my CPA as well. So that's another thing, but I can't say that yet. So I still have to sit for the exam.
I think to answer your question,
Oh,
Jamie.
yeah, exactly.
Why?
Are there like tax benefits or anything when you do pro bono work? Or can you like write that off, or how does that work?
It depends. A lot with taxes, we just have to talk about what the situation is. So if you gave a service, then no. If you donated material, then yes. So I know we had a member in a group that did a lot with another nonprofit doing fixing, and they provided a lot of service. The manpower that you provided, or if you provided a crew, unfortunately, that's not tax deductible, even if they give you a letter. But if you used equipment, materials, and you actually had physical cost to it, then yes, that is deductible. And Jacob, yes, I'm ready to play golf. I'm healed. I can swing now.
That
We're
was my
good.
professional question, everybody.
Professional.
Very professional.
Anything else? All right, I'll move on.